A lessee and lessor signed a 3-year contract where the lessee leased some equipment to be used in his own business. The lease payments are $50,000, payable at year-ends. Both the lessee and lessor cannot terminate the lease during the 3 years. The lease contract includes an option that allows the lessee to extend the contract for 2 additional years without the consent of the lessor. Based on the lessee's business circumstances and conditions, there is a reasonable certainty that the lessee will extend the contract. The interest rate implicit in the lease is not readily determinable. The lessee's incremental borrowing rate as of the commencement date is 6%. On the first day of the second year, a new version of the leased equipment became available in the market, and the lessee decided to invest in this equipment. The lessee's incremental borrowing rate as of the reassessment date is 7%. Account for the original lease transaction on the commencement date and on the reassessment date. Before calculating the lease liability of the original lease at the commencement date, let us figure out the length of the lease term. The first component of the lease term is the non-cancellable period, which is the 3 years of the contract, since both the lessee and lessor cannot terminate the lease contract during the 3 years. The example mentioned that the lease contract includes an option that allows the lessee to extend the contract for 2 additional years without the lessor's consent. As we explained in section 4 about the determination of the lease term, the optional period is included in the lease term if 2 conditions are met. First, the lease should be enforceable during the optional period, and second, there should be a reasonable certainty that the lessee will exercise the lease extension option, or not exercise the lease termination option. Here in this example, the lease contract is enforceable during the additional 2 years of the optional period, because the lessee can extend the contract term for 2 additional years, and the lessor cannot decline that extension. If the lessor can decline the extension, then the contract is not enforceable during the optional period. As for the second condition, the example mentioned that, based on the lessee's circumstances, there is a reasonable certainty that the lessee will extend the contract term for the additional 2 years. Given that these 2 conditions are met, the optional period is included in the lease term. So, the lease term here is assessed to be 5 years as of the commencement date. Now, let us account for the original lease. These are the schedules for the calculation of the lease liability, and the right-of-use asset on the commencement date. The lease liability at the commencement date is the present value of the periodic payments of $50,000, discounted over a lease term of 5 years that we just figured out, using a discount rate of 6%, which is the lessee's incremental borrowing rate as of the commencement date. And here, the right-of-use asset includes only the initial measurement of the lease liability on the commencement date, as the example did not mention any other components to be included in the right-of-use asset. This is the entry that should be booked in the lessee's books to recognize the lease transaction on the commencement date. And this is the lease amortization schedule for the original lease. And these are the journal entries to be booked in the lessee's books for the interest payments and the settlements of the lease liability at the year ends after the commencement date. Let us continue with our example. On the first day of the second year of the lease term, a new version of the leased equipment became available in the market, and the lessee decided to invest in this equipment. And because of that decision, the lessee is no more interested in continuing with the current lease agreement, and therefore, there is a reasonable certainty that the lessee will not exercise the lease extension option. So here, by looking at the 2 conditions required to be met to include the optional period in the lease term, we will find that the first condition is met, and the contract is enforceable during the optional period, because the lessee can extend the contract term with the optional period without the lessor's consent. On the contrary, the second condition is not met, because there is a reasonable certainty that the lessee will not extend the contract, and therefore, the optional period that was previously included in the assessment of the lease term on the commencement date, will not be included in the lease term on the reassessment date, and the lease term will only be the 3 years of the non-cancellable period of the contract. Since this change in the length of the lease term affects the calculation of the lease liability should be reassessed again on the reassessment date, the beginning of year 2. So, let us remeasure the lease liability. Here is the lease payment. We will use in this example the revised discount rate of 7% at the reassessment date, because according to the standard, if the change in the estimates involves a change in the length of the lease term, then the revised discount rate should be used to calculate the revised lease liability. And we have 2 years remaining in the revised lease term, the second and the third years. Insert the discount periods for the remaining years, the lease payments, then the present value factors, and here is the revised lease liability at the end of year 1, the date of reassessment. Now let us go for the calculation of the right-of-use asset. This is the carrying amount of the lease liability of the original lease at the end of year 1, just before the reassessment date. And this is the revised carrying amount of the lease liability that we just calculated here. And the difference is the adjustment that should be booked in the lessee's books, to reduce the lease liability to the new carrying amount. According to the standard, the right-of-use asset should be adjusted by the same adjustment done to the lease liability. So, this is the carrying amount of the right-of-use asset of the original lease at the end of year 1, just before the reassessment. And this is the adjustment done to the lease liability. And we get the revised balance of the right-of-use asset at the date of reassessment. This is the journal entry that should be booked in the lessee's books at the date of reassessment. Now, let us complete the lease amortization schedule here. Nothing is changed in the data of the first year. Insert the revised balances for both the lease liability and the right-of-use asset, and they are also the beginning balances for year 2. The interest charge starting from year 2 is calculated using the revised rate of 7%. Here is the lease payment of $50,000 for the remaining years. Complete the calculations, and we are done with the lease liability. As for the right-of-use asset, the depreciation charge is recalculated as the revised carrying amount divided by the remaining lease term of 2 years. And that's it. And these are the journal entries to be booked in the lessee's books at the end of the second and the third years. This is the end of this example and this lecture. In the next lecture, we will see another example about the change in estimates that involves a change in the amount expected to be payable under residual value guarantee. So, please check the following lecture.